Greetings. If you're interested in derivative trading, like what we do, sometimes you run into a crisis. They're rare for us because we deal with quarterly assets and make quarterly bets, but sometimes it feels like we're getting good income, and sometimes it feels like we're picking up dollar bills in front of a steamroller, which is what it felt like last week. So we recorded the internal discussion about how we dealt with our options being about to be called, and here's a copy of what happened. Thanks.
So the problem here is that we sold these when Bitcoin was down at like 60,000, and it seemed highly improbable that they would be called. So it just looked like free money. Two questions here. Or generally, does it make sense to cover our positions? Or more to the point, does it mitigate our losses? Or do we want to say we know more about the market and just be free and let those Bitcoin? Because there is a huge Trump rally going on right now who was perceived as pro-Bitcoin mining and anti-Bitcoin regulation, and this may speed the adoption of Bitcoin. But anyway, let's make it rational. First of all, when we make a decision, we can stop and think for a second. So one thing is, what was the volatility of Bitcoin over the last year? Now, you used to be able to just export this as Excel, but they took away that option. So you calculate the variance of the closes, right, or the daily return changes. Then you take the square root to calculate the standard deviation, calculate the trading days. Then you calculate the square root of that. So the realized volatility has actually been 52%. So right now, let's take a little bit of risk off the table and take a $4,000 hit, or actually $8,000, because it'll be two options. 6,357. So how much are we leaving on the table by mitigating some risk? Divided by that. We're taking, it's not insignificant. It's 7.7% of the portfolio. That 3, and it's like 50-50 that it'll be called. So it's really just, does your gut tell you this rally is going to keep going through the end of the year? I have huge conviction here. But if it does, remember 85 to 100, that's 15,000 times 6. That's $95,000 we would leave on the table if it goes up that high. Mind you, also, half of the gain we're not going to get because that's in the Contango portfolio. So actually, it's less than half because it went up so much. But this stuff, we only get modest interest rate, like 10-15% on when I swap them. Let's move to and see what happens. We'll buy back to at 0.67. Put that buy order there. Wait, I just did a buy order, right? There we go. And then I'm going to put a sell order in at 100,000, so that we still have some downside risk. Or sorry, we'll still have some income from it. So the decision was made, just to be clear, it looks like about a 50-50 shot across this barrier. So we're starting to mitigate our risk. We're going to buy back to, we're trading it hopefully to cross to the other side of the order book and save some money. And we'll move our call up a little higher. And it's going to cost us about $8,000 or 0.7%, 1% of the portfolio, which our investors are definitely much richer in dollars, but are hurting in Bitcoin because of our hedges.